Hello friends, I've shared strategies with the Laguerre RSI and Connors RSI, but so far the old school RSI has been untouched. A fine creation from legendary technical analyst Wells Wilder, the RSI is a standard inclusion in pretty much every charting platform out there. So let's put it to good use. The RSI oscillates between 0 and 100 as per this formula. Relative strength is the ratio of the average gain over average loss. The first average gain is simply the average of the previous 14 gains, while subsequent average gains are smoothed using this formula. The same applies for losses, with all values being positive. RSI values above 50 are considered bullish, while values below 50 are considered bearish. The 30 and 70 levels are often used to denote oversold and overbought levels, respectively. The RSI is most popularly used to detect short-term pullbacks. When the RSI crosses over 30, the market is exiting oversold conditions, and it's an opportunity to go long. When the RSI crosses below 70, the market is exiting overbought conditions, and you may go short. Let's use this as one of our entry conditions. It has been coded into a StrategyQuant custom template as shown. These placeholders are for additional conditions, which the genetic builder will populate randomly. For a step-by-step guide of the process, you can refer to the Connors RSI video. Here's one of the strategies that was generated. In addition to the RSI condition, it goes long when the 9-period momentum is rising. Momentum is simply the ratio of the current close divided by the close end periods ago multiplied by 100. For example, with a period of 9, the momentum of this candle is calculated as follows. In this case, we are not concerned about the momentum value, only whether it is rising or falling. Used this way, the momentum condition essentially operates as a loose trend filter. A buy stop is placed at the 27-period SMA of low prices. Trade management is a little excessive, with a hard stop loss, a break-even stop, trailing stop, and bar-based time stop. When running the genetic builder, I usually give the builder the option to include multiple exits and let the results do the talking. If you want fewer rules, simply uncheck the exits you don't want. Here's a long trade. And a short one. Both trades were taken out by the trailing stop loss. The equity curve shows a consistent uptrend without any deep drawdowns. I also backtested the strategy in MT4. Even with a different backtest engine and slightly different data, the equity curve looks similar. As usual, out-of-sample performance is slightly worse than the in-sample performance, but is still acceptable to me. I've received comments that the strategy's profits are ridiculously small, but that's only because I set the money management to trade a fixed 0.01 lots throughout the 10 years. At the risk of sounding like a broken record, the purpose of a backtest is to evaluate risk-adjusted returns, not to generate a fantastical profit. Don't be deceived by unscrupulous vendors. If I instead applied simple fixed fractional money management, risking only 2% per trade, the strategy generates about 8% annually over 10 years, or 110% in total. Not bad for a single strategy with conservative sizing. In practice, I always recommend trading a portfolio of strategies, which provides much better diversification and capital utilization. If you want to use Quant Analyzer to automatically generate diversified portfolios, check out the guide at the end of the video. Hopefully this video provides some food for thought. If you want to program this strategy in AlgoWizard or generate your own strategies using the genetic builder, check out the links in the description. Have a good one.